It is also being weighed by things going on in the global economy. Expectations are now very high that the United States will raise interest rates next week. Investors are moving back to America on the prospect of higher rates for their investments. That's been weighing on emerging markets like our own for the entire year.
The rand is losing value again, and it looks like a victim of circumstance. Currencies across the globe are losing value against the US dollar, with commodity-linked currencies especially vulnerable. Chinese trade data released overnight showed that Chinese purchases of commodities are still sliding, and that exports of Chinese goods are also slowing down further. The effect is that commodity prices started falling, with some already at or near multi-year lows. This means that countries who earn a great deal of revenue from commodity exports will lose more money. And with local economic conditions for nearly every one of these already stretched, this means even tougher conditions ahead, especially for the rand.
When we had all those rating agencies on Friday, announced the review of the ratings of South Africa, which with Standard & Poor and Standard & Poor and Moody's downgrading our outlook to negative, that began, all the wheels began to fall for the rand. And today we've seen the numbers out of China also very negative. The trade data out of China also very negative. And we've also got another local data that came out, which was also very negative, which is the the current account deficit, which is now widened even further to 4.1% of the GDP from 3.1% in the second quarter. So very negative. The rand looks like it's on the back foot, and it looks like it's going to continue to be on the back foot, particularly because we also got the Fed next week.
News continued today with